Hello and welcome to this webinar on an introduction to investing responsibly. My name is Rohan Bartra and I'm a financial wellbeing specialist at Hargreaves Lansdown, and I'll be taking this session. So today we'll be discussing what responsible investing is, why you might be interested in investing responsibly, and how to go and get started. Before we really get into it, just to make you aware that this should not be construed of as personal financial advice, but I do hope that you find this session informative and it does put you in a better position to make your own decisions. So just starting off then, choosing to invest responsibly. Well, fundamentally, it means different things to different people. What one person considers responsible and ethical may not be the same as the next person. For example, some people are perfectly okay with animal testing, whereas others don't think that's really an appropriate way in which to treat other animals. So with that, it's important to think about what you consider to be acceptable, because there are different styles of ethical investing and responsible investing. And so you can choose the style that suits you. One of the most restrictive ways of investing responsibly is ethical funds. Ethical funds have the strictest definition, and these will avoid investing into companies and assets that they believe do harm to society. Beyond that, though, there is sustainable impact investing and ESG funds. So sustainable and impact funds will invest into companies that they believe will have a positive impact on the world. With impact investing funds specifically, will try to quantify the impact that they are having. And this may include investing into companies who might not be doing the most responsible things right now, but these funds believe that by owning parts of these companies, they can speak to management, they can have a voice, they can lobby for change. And there are some really good examples of that in the past that have been quite successful. ESG funds take into account environmental, social, and governance factors alongside other factors when choosing investments, and it can do that in a number of ways. It could be that will allocate points towards a company achieving environmental, social, and governance goals, or it could just use a qualitative evaluation. There's different ways in which that can be achieved as well. So that is, in a nutshell, what responsible investing may well mean. So why invest responsibly and why invest ethically? Well, it's a great opportunity to help yourself whilst helping others. So you should expect to get financial returns. Financial returns are a key part of investing. That is why people tend to invest. So that definitely exists when you do invest responsibly as well. But there are non-financial returns as well. You get to support causes that you care about, whilst also hopefully making some money as well. It's important to opt for investments which resonate with your moral compass. I mean, most of us all recycle and so forth, but this is a part of our lives where we do have control as well. And with a significant amount of money in pensions, we can get that money to work just as well as we do in our day-to-day lives. So you can invest with fund managers who positively engage with companies that they invest into to actually affect the changes that you're looking for. And there is also evidence to show that companies are penalized for unethical practices. People do take account of the news. If a company is in the news for doing something unethical, then that does tend to hurt them. People don't necessarily want to buy from companies that they believe are doing unethical things. So let's take an example. So this is one of the funds available on the platform. It is not a recommendation to buy this fund. I've used this as an example because the data that it provides is really good. But owning £10,000 of their fund through 2019 would have generated a significant amount of renewable energy. You can see that it also avoids a significant amount of carbon dioxide emissions. Just to put that second statistic into into context, people in the UK can generate several tons of carbon emissions, and this would offset a significant proportion of an individual's carbon emissions. Distributing 30 million litres of water for consumption, and then of course recovering, recycling 140 tonnes of waste material is quite a significant impact from £10,000 alone. And that's just a snapshot of the impact as well. There is, if you go to their website, you can find further details as to what that £10,000 could do. So investing in a responsible way can have big impact aside from just those financial returns, which is the key point here. So there are, though, some important considerations when it comes to investing responsibly. And it is often thought that ethical funds and responsible funds underperform their less scrupulous peers, but that's not necessarily the case. And in the past year, there's been a significant amount of data to show that throughout 2020, more ethical and more responsible funds have outperformed the less responsible benchmarks. There's a number of reasons for that. So you don't need to compromise with regards to investing responsibly. You can still get good returns by doing so. So does it pay then? So let's take a look. So when you invest responsibly, you do reduce the risk of reputational damage. It can give the company a competitive edge. It can be a unique selling point. And there's some clothing manufacturers, global manufacturers, who've really benefited from selling on the basis of sourcing their products responsibly and treating their employees fairly. They may also benefit from global shifts. If you as the world cares more about renewable energy, reducing carbon emissions, companies that are already operating in sustainable ways may well benefit. So the example here is electricity generation. There's a large push to move away from greenhouse gas emissions. So companies that are already producing sustainable electricity generation, as the need for electricity increases, may well have a competitive advantage there, as they've already got products and potentially infrastructure in place there as well. And then, of course, as a number of countries raise standards with legislation and policies, companies that are already exceeding the bare minimum are likely to be less impacted by changes to these standards. There are, however, drawbacks. So let's just have a quick look at what those drawbacks might be and what you should really consider with that. So there is a reduced investment selection. Of course, there will be companies that will never fit into any form of responsible criteria. And that means that you may not be able to go into sectors that perform well because, unfortunately, or whichever way you want to look at it, not every company will be doing ethical things, but people may still need their products and services. So you may not necessarily benefit when those companies do well. Ethical investing can involve higher fees with the additional research and so forth required. Fund managers who operate in this area may charge higher fees than average because, as I say, of the additional research required, and also the lack of selection can means that there isn't such a push to drive down costs as there is necessarily in the wider investment market. If you're looking to be quite precise and trying to be in those very strict ethical funds, that can often result in being in smaller and medium-sized companies, and that's simply because larger companies will have their fingers generally in larger pies or in more pies, which may mean that they're more likely to fall foul of a fund manager's standards. Smaller and medium-sized companies can be higher risk because they're more cyclical. And what I mean by that is that in good economic conditions, they tend to do well, but in poor economic conditions, they can underperform the average. So it can result in more volatility within the portfolio. And there's a little bit of a difficulty here with choosing some of these investments because there aren't as many ethical, responsible fund managers around, especially there aren't that many that have a long track record, and therefore there aren't that many that have a long and successful track record. So it can make selection quite difficult. On the flip side, though, there's less to choose between when it comes to the crunch. And we do have some sections on our website where we do have some ideas, and I'll show you and give you the URL on that in a few slides' time. So you do need to consider what level of restrictions are right for you. So ESG funds, those that take into account environmental, social and governance factors, are the least restrictive type of responsible investing. And many ethical and responsible funds believe that their criteria will lead to outperformance in the long term. So do think about that and think about the way in which they're marketing, positioning themselves. And with careful research, it is really possible to make investments that not only meet your ethical criteria, but also perform well over the long term. But that research does mean that you need to understand what the objectives of a particular fund is and its screening criteria. So you can apply your own restrictions here. You can choose to invest into individual companies should you so wish. If you don't want to go into collective investments and funds, that would mean that you can vote at AGMs in favor of motions and that you agree with, and of course against things that you disagree with. And by doing this, but by investing sort of directly, you do get greater visibility over the ethics of your investments and that opportunity to sell out of any that you don't agree with. But it is really important when you're investing, not just to look at the ethical considerations, but also to look at the wider, longer term potential of that investment and of the investments as a whole. So we can help you. We do provide research and commentary on a number of investments. We do have access, and via the platform, you have access to shares, investment trusts, and so forth from the UK, North American, and select European markets at very competitive rates. We have really good help desks, guides, and ideas to help you choose and make your own well-informed decisions. Here's just a quick screenshot from our website. So there is a guide to responsible investing, and there is also a fund sector review on responsible investing as well. So you can read details via the guide. We do provide regular updates from our expert team, and they'll provide they'll provide commentary at least once a month. And there is, as I say, further details on some of those funds available. So do please make use of that. So in summary, there should be three things, hopefully, that you'll walk away and consider. Think about what ethics means to you. Think about where you draw the line. Are you happy with the risks of investing in general? Because responsible investing, ethical investing still involves risk. And how much help do you want or need? There's quite a lot of tools and guides available to you, and we do try and help that as much as we can, and we are certainly working on that for you as well to make the information as easy to digest and approach as possible. If at all you want advice, then of course we can put you in touch with our advisory services as well. All of this does apply within any of the investment accounts that we have available. So that includes investments such as the pension, stocks and shares ISA, lifetime ISAs, and fund and share account, all within the one HL portal, giving you that one point of contact, that one way in which to do everything. As I say, there are a whole load of guides available to help you make your own choices. There's the URL towards the responsible investment guide there. You can monitor your investments via the app, and do just contact us if you need a hand, if you want us to point you in the right direction, if you've got any questions on this. The contact details are on your screen now. thank you for listening in today. Please do take a few moments to read through these important investment notes and do let us know if you have any questions. Thank you.